Global Investing Brief. Stocks tumble on Friday, Nasdaq snaps 8-week winning streak, live updates. Source: CNBC. Stocks slid on Friday, with the Dow Jones Industrial Average falling by 0.65% and the S&P 500 sliding by 0.77%. The Nasdaq Composite closed lower by 1.01%. After an 8-week winning streak, this decline marked the end of multi-week winning streaks. For all three major averages, the S&P 500 lost about 1.4%. The Nasdaq dropped 1.4%, the worst weekly performance since March. And the Dow was nearly 1.7% lower. Investors are showing renewed fears of a U.S. and global recession, which is attributed to elevated inflation levels and Federal Reserve policies. More than 400 stocks in the S&P 500 traded in negative territory, with information technology being among the biggest laggards, down more than 1%. Shares of Nvidia, a major artificial intelligence beneficiary, were down 1.9%. In contrast, CarMax shares jumped 10% after exceeding first-quarter revenue expectations. In other news, Goldman Sachs shares declined as the investment bank likely faces a large write-down for its acquisition of fintech firm GreenSky. The stock was down 1.5%, weighing on the Dow. Overall, this week saw a downturn in the market and an end to previous winning streaks as investors express concerns about inflation and potential global recession. The bigger is better approach to AI is running out of road. Source: The Economist. The article discusses the challenges of the current trend of developing large language models, LLMs, such as GPT, which are powered by massive artificial neural networks. While these models have shown impressive capabilities, their size and computational requirements are becoming increasingly problematic. The cost of training and using these models is skyrocketing, and there are concerns about running out of high-quality training data. To overcome these challenges and continue improving AI, researchers are exploring more efficient strategies. This includes making trade-offs by training models with more data but fewer parameters, using rounding techniques to reduce hardware requirements, and fine-tuning LLMs for specific tasks. Furthermore, attention is being given to the implementation details of AI programming, improving tools and programming languages, and designing specialized hardware. These approaches aim to extract optimal performance from AI models while reducing costs and addressing scalability issues. Despite the current limitations, experts believe that there is still room for improvement in the development of more effective neural architectures. The extend and pretend real estate strategy is running out of time. Source: Bloomberg Businessweek. As lenders in the commercial real estate industry gather in New York, concerns are arising that the extend and pretend strategy of lengthening loan terms to avoid foreclosing on plummeting property values may no longer be effective. Rising interest rates have deflated inflated valuations, forcing landlords to come up with more cash for refinancing. Regulators and ratings companies are also scrutinizing real estate lending practices, while changing office dynamics due to the pandemic pose uncertainties for the industry. With limited supply and growing demand for commercial real estate debt, lenders may resort to higher rates and be unable to extend a significant subset of loans. Property values are expected to decline, and about $1.3 trillion of commercial real estate loans will come due by 2025. The industry faces potential distress as borrowing costs increase and borrowers struggle to refinance. Additionally, the strained banks holding a significant portion of commercial real estate debt are at risk of insolvency or consolidation. Overall, the current reality of commercial real estate poses challenges for lenders, landlords, and investors alike, leading to a potentially concerning future for the industry. We'll strive to get CPI down to 4%. El Niño a challenge for food inflation. DAS. Source: Financial Express. Governor Shaktikanta Das has stated that the Reserve Bank of India, RBI, will make efforts to bring headline inflation down to its 4% target, but highlighted El Niño as a challenge to its endeavors. In an exclusive interview, Das expressed confidence that the economy will grow at 6.5% in FY24. As estimated by the RBI, the central bank's rate hikes, along with supply-side measures from the government, have contributed to lowering inflation to 4.25% in May from a peak of 7.8% in April last year. Das emphasized the RBI's watchfulness on inflation and aims to achieve a 4% inflation rate. The relation between interest rates and inflation was discussed, with the possibility of rate cuts if consumer price inflation stabilizes at 4%. Factors such as geopolitics and the domestic monsoon situation were identified as challenges for inflation. On the growth front, Das expressed confidence in the RBI's estimate of a 6.5% expansion in real GDP, despite lower estimates by other organizations like the IMF. The sustainability of credit growth, including project loans, was also highlighted. The stability of the rupee and the manageability of the current account deficit in FY24 were mentioned as positive factors. 3 reasons why a major market pullback is coming, and how to prepare for it. Investing.com. Investors should prepare for potential volatility in the stock market as it faces 3 significant headwinds. The article highlights the Federal Reserve's commitment to interest rate hikes despite market expectations, the upcoming Q2 earnings season, and the extreme bullish sentiment among investors, with cracks appearing in the current market rally. The author suggests being cautious and rebalancing portfolios to reflect a more bearish position. The S&P 500 is predicted to potentially decline by almost 6%, followed by a more forceful plunge. However, this pullback could create buying opportunities in leading stocks, particularly in the tech and growth sectors. The article also mentions a summer sale on Investing Pro, a platform that provides comprehensive information and tools for investors. Access to cutting-edge tools, real-time market analysis, and financial insights is available at discounted rates for monthly, yearly, and bi-yearly subscriptions. Thanks for watching.